Britannia, Godrej Consumer and Hindustan Unilever trade higher after the government cuts basic import duty on crude edible oil from 20% to 10% to reduce prices. Apollo Hospitals trades nearly 2% higher after an in-line fourth quarter. Occupancy improves to 67%, while the company also announces a 6,000 crore rupee capex plan. Management tells CNBC-TV18 they're targeting occupancy levels of 70 to 72% going ahead. M&M trades higher as its monthly sales continue to perform and it's outperformed the peers. In Eicher Motors surges as Royal Enfield sales rise 26%. Hero MotoCorp trades under pressure after recording low single-digit growth across segments. Mahindra Automotive's management tells CNBC-TV18 their focus is on increasing volumes than market share. Niva Bupa slips 10% after nearly 2.7% equity changes hands in a block deal worth 400 crore rupees at 83 rupees a share, which is about 11% lower than the previous close price. Schloss Bangalore, owner of Leela Hotels, makes a subdued debut on D Street, listing at about a 5% discount to its issue price. Now the stock's moved off lows, sitting with a cut of 1.5%. Tank storage terminal operator Aegis Vopak 2 makes a weak debut, listing with a discount of about 6%, but from there on it has seen some purchase, mildly in the green. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. And as we look at it, the markets, we've seen a bit of a downtick. On the Nifty, it's down by about 150 points. And the mid-cap index is doing a tad better. As the indices at the top of your screen tell you that the Nifty Bank 2 isn't falling as much as the frontline indices would suggest a decline. So what is it that is leading the Nifty and the Sensex lower at a time when the Nifty Bank is not falling as much? It's the export-facing sectors. We have the IT index, which is lower, and the other one is the metals index. The announcement of Trump increasing tariffs or doubling tariffs on steel and aluminum imports into the US has had its bearing on the metal stocks, all of them lower, so we'll keep an eye out on that. And the IT index too, lower by about 1.1%. However, the golden lining right now is that the Nifty has managed to hold on to 24,500. Closer to those levels, we saw some purchase, and from those lows, there has been a bit of a bounce led on the frontline index, and it's been led by the PSU banks. So we have the Nifty PSU banks, which is higher, and you have the FMCG sector, which, as we pointed out earlier, benefiting from lower duty on imports of palm oil. So that's margin positive for a lot of these food and soap makers. But let's get you some more ideas of profit. We have our colleagues at Money Control Pro joining in. Jitendra Gupta joins in with a stock.
Hi, thanks. Cummins India experienced a mixed performance in Q4 FY25, marked by short-term headwinds. While domestic challenges affected sequential performance of the company, it remains well positioned for the recovery in FY26, driven by largely global diversification and strong momentum in the exports. In the quarter ended March 2025, revenue rose by almost 6.5% on a year-on-year basis. However, domestic sales declined by 25% sequentially, impacted by policy delays and execution issues. On the other hand, we have seen exports grew by a strong 39% on a year-on-year basis, of course, because of the strong demand in the international markets. Going ahead, it expects double-digit revenue growth in FY26. Exports demand is expected to remain robust and domestic recovery is anticipated going forward. Structural drivers such as increased demand from sectors like data centers, infrastructure, logistics are expected to support growth going forward. At 65% capacity utilization, it can deliver higher growth without immediate capital expenditure. Cost optimization initiatives are ongoing, and it aims to bring higher margins going forward. Valuation-wise, stock has corrected from its peak of around 4,157 to current levels. It is currently trading at around 31 times its estimated FY27 estimated earnings. Of course, with the dividend yield of around 1.5%. Given stable growth and there is a strong momentum in the exports, a re-rating is possible going forward.
Welcome back. It will be very interesting to see if we see a bit of a bounce back on the frontline index, because one of the components that was weighing down on the index, the IT pack, is now showing signs of recovery. So Infosys, the intraday chart, comes up for you. The stock is still lower by about 0.2%, but off lows by about 1% as well. So we'll watch out for any incremental recovery in the IT pack and the impact that it will have on the overall index as well. JSW Steel is the other one, which is currently at the low point of trade with a cut of 2.5%. But we're talking about the new listing. Let's talk about that one. We have Ankur Gupta, who's the managing partner and head of real estate for Asia Pacific and Middle East at Brookfield, joining in on account of the listing of Schloss Bangalore, the company that owns and operates Leela Hotels. Thanks a lot, Ankur, for joining in. It was a pleasure speaking with you when the issue opened for subscription. And now as we speak, it's a subdued listing that we've seen, on account of a couple of factors. One, the market sentiment by and large is, on the downside in today's trading session, but also the demand for the IPO, barring the qualified institutional buyers from a retail and an HNI standpoint, was just about par for the offer that you made. The big question, however, from here on, even as there are a lot of tailwinds for the industry, you get the added benefit of lower finance costs. So basis the stock that currently is trading and the valuations that the street is ascribing, they are expecting close to 250 crores in terms of profitability by FY27. Do you think that's a realistic estimate given the 150, 160 crore savings that you will get on account of finance costs?
Hi, Mangalam. Thank you very much for having me today. A very good morning to all of your viewers. It's a momentous day today. In the path that exists in front of hospitality in India, the story of real assets in the country, and the development of India that needs to be housed in properties and companies like the Leela. It's the largest IPO ever in the history of hospitality sector in the country, 3,500 crores. Very, very grateful to a lot of investors and first-time investors. We've had sovereign funds coming in from the Middle East, from Europe, few of the largest names out there in the domestic mutual fund space. So I would say that today is a day to celebrate how far along the hospitality and the real estate and the real asset sector in India has come through. On behalf of Leela, I would say that since our March numbers that have been publicized, and you're accurate that post listing the finance cost will substantially reduce. More important than the finance cost reducing is the amount of access that Leela has today to capital, to partnerships, to stock, and to growth. I'll give a couple of examples. Over the last 2 months, we've advanced our program to create a Leela Palace in Mumbai. We've added another property that will soon come up in our district where we own literally the entire zip code in Powai. And we have furthered our stated objectives to take the brand global. So all in all, the sector tailwinds are clearly ahead of us. Leela was voted as the best brand in the world.
Right.
Very proud that an Indian brand finds global appeal. And I think today is a momentous day in all of that.
No, it is a momentous day. We take that point and we can't, disregard the journey that has been. But the question about stock markets, and you'd know this better than everyone else, and investing, as there is the journey in the future that matters a lot more than what has taken place in the past itself. So a two-part question. Once again, a repeat of what I asked you earlier. Is 250 crores on the bottom line possible by FY27? And the second part, you spoke about increasing your, hotel expansion plans, etc., opening newer places as well. Currently, as per your, red herring prospectus, you have about 3,500 keys. Over the next 2 to 3 years, what is the key addition pipeline that you have?
So I would say the board, in our first analyst call, we will issue guidance, but your numbers are fairly accurate. I would say the company should do better than that. So I can only give so much guidance right now. To your second question, we've disclosed 7 + 1, 8 hotels in the pipeline already. And as I mentioned, there are several others that the company has been working on for the past several months. So the growth ahead of the business is substantial, is superlative. And the ability to extend the brand into newer territories, repeat what has worked for the business. I would say, and I've said this in your channel, that the Leela should be thought of in comparison to any large global brand that exists today, with the added benefit of it being a truly Indian brand. Indian markets are the best in the world today, and the Leela is right front center of that story.
All right. assuming that you actually go ahead and do a little better than what one's estimate would be, you would still be trading at around 55, 60 times 2-year forward price to earnings. What's Brookfield's own long-term plan? How are you looking at this space apart from Leela? You have a couple of tie-ups with a few other brands as well. That's point number one. And secondly, on Leela Residences, what's the monetization plan here?
So let me answer a couple of questions for you. In the last fiscal, which is looking back 12 months, the Leela business did an EBITDA of 700 plus crores, which means that on an EBITDA basis, which in our estimate, we got 8 times subscription from qualified institutional buyers, a lot of demand in large funds coming into our anchor allotment. So the street estimates for how to value business like this is more basis an EBITDA multiple, which I would say today at the listing price, at the IPO price, makes Leela very, very attractive on even a backward 12 months basis. On a forward 2 years basis, I would think that this business is an amazing opportunities for current investors and for more investors to come and join the story. As far as Brookfield is concerned, we've been in this journey in India for the last 15 years. Our portfolio in India today is almost 3 lakh crores. We are a long-term investor in every story. We build businesses for perpetuity and then involve and invite partners to join us to even further that.
All right. And the monetization model for Leela Residences?
So the Leela Residences is a very attractive sector. India lacks serviced apartments. As we see the proliferation of GCCs in the country, a lot of business activity, people getting more and more mobile, the need for high quality rental accommodation for senior executives has never been felt more. And the supply-demand mismatch that exists across hospitality is very massive. In this space, I would say that the supply is almost non-existent. Brookfield has a lot of experience in rental housing, serviced apartments across the world. And that's what we are planning with our first service apartment, Leela Residences, that's going to open up in Mumbai early part of next year. And we certainly believe that business model has a lot of tailwind behind it as well.
So as a proportion of your overall revenue, if you could give us a sense what your target is, should come from the residential business.
It's too soon to tell right now, but as I said, there is almost no competition in this space, and with more than 200 million households getting into the luxury consumption story, the demand for high quality living spaces, which are attached to workspaces, which are attached to places where people spend their time, has never been felt before. And I would also like to say that Brookfield has the experience of delivering on that business plan.
How much faster can you grow in the future than what you've grown in the past? If you could give us a sense on that.
Over the last 5 plus years, we more than tripled the business.
Yes.
With today's event, Leela has further participants from a large number of investors, public market players, large mutual funds, global financial institutions. I would like to believe that the best years are still ahead of us. And the company has a very clearly defined business plan, very healthy balance sheet, and it's playing in a sector which has very, very high demand and limited supply.
Right. Let me ask you this again, because over the last 5 years, like you said, you've tripled your business, but that's on account of a favorable base. You had, the post-COVID boom that happened as well. And a large part of that also was from the initial corrective actions that you took on the company after taking it on as well. Now, as we speak, you've made yourself a formidable base. At the same time, the trends, while they're extremely strong still, they're petering out when it comes to the pace of growth because of the high base already. So in regard of all of that has happened, do you believe that the next 5 years you are likely to triple as you have in the previous 5 years? Because you're saying that, maybe the pace continues.
I would say that, you rightly said that the last 5 years have had many events. Some of them have been favorable. A lot of them have been very unfavorable in the business. It's very easy to look back and say that COVID or the post-COVID revival helped the sector. but it's also, it shouldn't be lost on anybody that those 2 years were probably the worst years globally that the sector saw. So if in that period the business grew substantially, I would like to believe that starting, for example, today, our targets should be even higher than that, and not just our targets. Our belief that this business will be substantially larger is rooted in first principles of the opportunity, of where the business prides itself, and the management team's experience, along with the board that is there to guide them, and frankly the sponsorship or the promotership, as it's called in India. So I would say this is a perfect storm for this business in the space that it exists to grow substantially, hopefully, and most likely will outpace the growth that we saw over the last 5 years in the next several years.
Thanks a lot for that, Ankur, for joining in. Again, a momentous day, so wish you many congratulations, and hopefully you will be celebrating in one of your Leela properties itself. So that's, Schloss Bangalore, the owner and operators of the Leela. Slightly subdued in terms of listing because of the market sentiment, etc. as well. But, from the time that Ankur started speaking, there was a minor recovery in the stock price as well. A couple of details that he said which bear some importance. One, 3 years from now, or FY27, we can probably see the net profit cross over 250 crores. And the last 5 years, they've tripled their business. The next 5 years, perhaps, they could grow a lot faster as well, with important parts of the revenue coming in from newer properties that they've lined up for the next couple of years. With that, we'll slip into a short break, come back on the other side, get you more on the markets and a lot of stock-specific action. Stay with us. Watch out a couple of stocks in the broader markets. They're doing extremely well. We have Yes Bank, which has now seen a bit of a spike, currently at the high point of trade with a gain of almost 4.5%. But a few of these cement stocks are also picking pace. So we have Dalmia Bharat from the broader markets, currently about 1.7% higher, but most of the gains have come by in the last 15 minutes or so. And following suit is also Ramco Cements, which has moved higher to the high point of trade. Alongside that, we have India Cements as well, which too has seen a bit of a spike, and most of the spikes have come by on all these cement stocks in the last 15 minutes or so itself. So we have Dalmia Bharat, Ramco Cements comes up for you on the screen, and we have India Cements as well, which should come up for you on the screen in terms of an intraday chart. And actually, pull up the ones to the west as well. We have Ambuja Cement too, which has seen a bit of a spike. It opened slightly flattish, thereafter saw a bit of a dip. That dip has been bought into and currently in the green. We have the technical outlook on the market right now. Saumil Mehta of Capital Markets, Mirae Asset, Sher Khan joins us now. Saumil, we're seeing the frontline indices consolidate. They've been in this 24,500 to 25,100 sort of range for the last few trading sessions. Where do you see and how do you see this range breaking? What would be the technical triggers according to you?
This range has been there since last 3 weeks, and we are on the 4th week now. I don't see much in the coming week, but however, the undertone still remains positive. So I'll be expecting a target of 25,500, 25,400 in the medium term outlook. However, in the short term, I think still this range is intact and I'll be expecting more consolidation. In the bank Nifty as well, I'll be expecting a good consolidation. However, the undertone still remains positive. Today, the PSU banks are looking great. I'll be expecting targets of around 56,100, 56,800 in the short to medium term outlook. So undertone remains positive for Nifty and bank Nifty both. We are at the lower end. The lower end is 24,500 for Nifty and 55,600, 55,500 for bank Nifty. So this is the right time to go in and buy with a good risk reward ratio. Sectors like banks and reality, two of them are looking great, and sector rotation would be the flavor at this point of time. So stock specific and sector specific would be the focus. My stocks for today would be one from the bank, one from the reality. One is IDFC first. Stop loss would be 67.50 and the target would be 70.50. A small consolidation has broken on the upsides, taking support at 20 daily moving average, which is a great sign in the medium-term outlook as well. The second one is Oberoi Realty. Same thing, consolidation break on the upside, taking support at 200 daily exponential moving average, which is a great sign in the medium-term outlook. Stop loss would be 1715 and the target would be 1820.
All right, so IDFC First Bank and Oberoi Realty are your stock picks. Is there anything you like specifically in the cement pack? Because we were talking about, just before coming to you, Ramco Cements, Dalmia Bharat, India Cements, all of them spiking a little. And it's unusual because before monsoons, you don't see any of these cement stocks spike. Is there anything chartically that suggests this move?
See, we have seen a decline in the last couple of trading sessions. Probably since last week, we've seen a decline. And now that is a small, in the very short term, a small retracement of that decline. I would not go in and buy at this point of time, only if the highs are crossed. Like, for example, Ramco Cement. I like Ramco Cement overall in the medium-term outlook. If it goes above 1015, only then I'll go in and buy. But at this point of time, avoid would be my suggestion.
All right, take that point. Thank you so much, Somil, for joining in and giving us your views on the index as well as individual stocks. On the index, he believes that consolidation will continue, but it is a positive from a medium-term standpoint or the structural move for the Nifty. And as we speak, actually, the Nifty has conquered the 24,600 mark as well. So from the lows, we've seen a near 100-point recovery on the frontline index and led by some recovery from the lows in the IT pack itself. Before we slip into a short break, just pull up the intraday chart of Nykaa. The company reported a fairly good set of numbers, but maybe weakness in their fashion business is what is keeping the street on tenterhooks on that stock. So currently at the low point of trade. We'll take note of a bunch of these stocks and the market in general on the other side of the short break. Stay with us. Eternal, that's the stock on our radar right now. It's up at the high point of trade, so a big move is what we're seeing on Eternal. Remember, it has been under pressure, quick commerce related issues, but more importantly, the liquidity event when it comes to the company having capped its foreign shareholding to 49.5%, and as a result of which its exclusion from the frontline indices like MSCI as well as FTSE. By frontline, I mean frontline passive indices, and then there was a near $1 billion worth sale on account of that reject. Now that the supply event is over, maybe the street is looking at these stocks favorably. And Omex Realty is the other one, which is spiking up around 12% right now. So that's a stock that we'll keep an eye out on. Omex is higher by 12% on the broader markets, with a fair amount of volumes backing that stock as well. We spoke about Apollo Hospitals trading mildly higher after an inline set of fourth quarter numbers. The management also spoke with us earlier today. Ekta joins in to tell us more about the numbers and what she made of the management conversation. Ekta.
Well, yes, for Apollo Hospitals, it was an inline set of numbers. The Q4 occupancy improved to 67% versus 65%. The Q4 GMV was up 11% as well. And the 24/7 guidance, the Apollo 24/7 guidance of break-even is intact at Q3 to Q4 of FY26. Now, in terms of a couple of call takeaways or, a couple of management key takeaways, they have said that they are targeting 70 to 72% occupancy increasing, 10% increase in volumes of higher end surgeries has really affected or impacted the ARPOBs. So that is probably a trend we can see going forward. FY26 could see another 7% increase in ARPOBs. International revenue did not meet the expectations, but they are looking at newer markets to diversify risk. They are moving towards 1,000 crore GMV per quarter for the Apollo 24/7 business. They will begin the Worli Hospital post monsoon, and they have expansions planned in various cities: Hyderabad, Kolkata, Delhi, Gurgaon, Pune, and over around 6,000 crores in the next couple of years. But they are adequately funded when it comes to the capex lined up, especially also from internal accruals. Morgan Stanley overweight, they've cut their target price. Nomura is neutral, Citi has a buy, and Goldman Sachs has a buy as well on the stock.
All right, Ekta, thanks a lot for that. So that's about Apollo Hospitals. With that, we'll wrap up on this edition of Chartbusters. You stay tuned to CNBC TV18 for more unmatched insights and unparalleled market coverage. Keep watching. Nuvama presents CNBC TV 18 Market Central.